I think we have
Yes,
Mr. Sabu Jacob with us, the Chairman and Managing Director of Kitex Garments. He's joining us on the phone line. So let's resume our conversation on earnings, and then we will see if we can get back to GST. Mr. Jacob, thank you very much for joining us. Well, this has come as a bit of a disappointment, this 6% top-line growth, and the market has quite clearly expressed its displeasure in your stock price. But would this be the pro rata growth in the coming quarters as well, or will you be able to better the top-line growth?
See, actually, this first quarter always, for the textile field is going to be little slow. So what we expected only 110 crores, but we achieved 115 for the Q1. According to us, is a much better result. But if you see the PBT also, if you compare to Q1, we made 2.45% increase.
Mr. Jacob, morning. So for FY16, you had said that you would do about 600 to 650 crores of revenues. Do you stick to that guidance?
Yes, we will definitely reach.
Okay.
And always, this is one season to the next season. This is in between that. So always, you find, last, couple of years, if you find, Q1 is always a slow quarter.
Okay, but what went wrong? Is it only this quarterly slowness, or do you want to take us through your quarter gone by and tell us if there were any one-off negative events?
No. See, Q1 always slow, and next Q2 you will find much better. Q3 is further better, and Q4 we'll make the maximum result.
Okay.
That is always is the trend.
Okay, what are your major export markets? Are you seeing the demand continuing?
Demand already, we have already fully booked, for the 16, and we are fully packed for 16 business, fully covered.
Okay. So 600 to 650 crores is your expectation for revenues, but what about on the margin front? Because this time around, you maintained your margins at around 27.6%. Going ahead, say by the end of FY16, where do you see your margins?
See, the margin in a Q1, last Q1 and this Q1, always, now 2%, we made increase. Definitely that trend will continue, and, we will, we'll make a much better margin on that.
So,
okay. Are you looking, therefore, at any other expansions? Since you say you are fully booked FY16, clearly you have more demand than your capacity allows. Should we expect any capex plans?
See, this year, actually, we plan for 15 to 20% increase on the revenue. And within 3 years, our plan is to, double the capacity, that is 100% growth. So that means, slowly, we are also adding the production, and, that is already planned, and, orders are taken for that.
Okay. So what exactly is the capex that you have planned? The amount?
Capex, it's not big amount, it's like only 10-15 crores this year.
Okay.
See, already, we have invested, huge on the processing side and, last couple of years. So the investment is very marginal, but, the revenue is going to be much more.
One thing that is hitting your profitability is the higher interest expenses. Even in this quarter, your interest cost has gone up to almost 5 crores versus 3.5 crores earlier. Can you tell us, by the end of the year, how much will your debt go down to, and how much will your interest cost drop?
See, actually, debt, if you see, the reserve in our hand, and debt versus, is zero actually. We have, surplus, but, the interest rate, last year, there was a subsidy on the interest, the government has reversed that. That's why, that increase of 5 crores on the interest rate.
All right.
In spite of that interest increase, we made a 2.4% increase on the PBT.
Yes, I saw that. All right, we'll leave it at that. Sabu Jacob, thank you very much for joining us with those details. This, I think, has warmed the market's heart. We must pull up the intraday of Kitex. At one point in time, it was 9% lower. After Sabu Jacob reiterated that or emphasized that his performance in the first quarter should not be taken as the standard for the remaining quarters, and that they will indeed do that 650 crore that Sonia was asking him about.